Welcome to the third quarter of 2024's Market Review. My name is Kezia Samuel, Deputy Chief Investment Strategist with AssetMark. For the quarter, the S&P 500 hit record highs to close out the quarter, and this is despite a spike in volatility that we had not seen levels on the VIX all the way going back to the COVID pandemic during the quarter. The key events that marked this quarter for strong returns was this big Fed rate cut of 50 basis points. We had inflation that continued to show slowdown, and last but not least, optimism that the economy was not headed into a recession. All of these events led to a rotation in the market winners during the quarter. The artificial intelligence fever that had taken stronghold on the markets for much of 2024 finally broke, and we saw leadership shift towards small caps, value segments of the marketplace like dividend payers, and even real estate as being one of the best sectors performing in the S&P 500. Looking at international markets, emerging markets not only beat out the US, but also had one of the strongest months and in fact reached levels not seen in the last 2.5 years. And this was caused by a rally in China, which got stimulus from its central bank towards the end of the quarter to help its ailing property markets. But we talked that the main event for the quarter was the 50 basis point cut from the Federal Reserve, which marked an easing cycle from the Federal Reserve. This caused much of the yields in the bond markets to fall. As an example, the 10-year Treasury went from 4.3% at the end of June to 3.8% closing out the quarter. This caused all bond investments across the spectrum to have strong returns for the quarter, and also a huge shift in the year-to-date returns, causing bonds to have positive, strong returns from the quarter to the year-to-date. For additional information, you can find this client-friendly information in the quarterly commentary. With that, thank you for listening and hope everyone enjoys a cool fall. Take care.